went back through years and years and years of data. When I found Fibonacci, I started to get into Gann, still didn't know Gann that much, right? And I just wanted something that stood the test of time. Now, you've heard this before, trend is your friend, okay? And I've said it this way, it's not a little saying, that's a real thing, okay? Understanding trend is right there, swing breaks. Nobody can show me that while it's happening. I've like run into one person, okay? Now, what I want to prove to you tonight is understanding the mathematics and the structure of the markets, okay? This part on my chart right here is 1929. I'm going to go from the 29 crash because I want to go all the way back so you can see that it's not a self-fulfilling prophecy. And I want you to see that it's done it since then. Okay? Now, as I go through this, all right, I want you to pay attention. This in green is Fibonacci, Gann space movements, and symmetry. When I get into a trade or when I'm looking at a chart, I am looking for this. It's just a habit of doing it. And when I see that, I immediately think strength. It's running its rhythm. It's almost like it's the same group of people buying and selling and buying and selling and buying and selling. Okay? We don't ever know that, but you're going to see tonight. Now, as I go through this, here's what I want you to do. And it depends on the market, depends at different times. I put these on here. If you look at my chart, okay? Now, these are the targets, especially when you're new. There's 3 targets instead of 1, okay? This is the first target. This is going to be second target, and this is going to be third. I pretty much run 1 and 2. Okay? This is going to be challenging for most of you to sit in a trade like this and be willing to give it back. Okay? Now, these red lines, these are my FIB retracements. Now, I don't have the third one on there. I just put the 50% and the 618. This is the hot zone. It's got to pull back into this. Now, what I want you to see as I go through this, as we get a swing break, how often it comes back to there, and back to there. This is about what it's going to be, okay? This is going to be in the high 80s, low 90s that you're going to get back to here. This is going to be in the high 70s, low 80s that you're going to get back to here. And depending on the market, right around 60%, you're going to get the extension before you get stopped out. This is a huge, huge edge. Okay? Works on any time frame. Okay? The thing I want to get across to you is this. This is the thing you have to be ready for. Is that right there. I'm going to show you this. This is a piece of cake. Okay? But I can't get you to see that. This is trend. So this is what I'm going to get at here. You write this down so you have it. However you want to word it to yourself. The second that I get a swing break in the opposite direction or even with the same direction, I must assume trend has changed. Okay? I don't care if you see this big, long move up here for 2-3 weeks and you say, oh, the dominating trend is up. No, I don't care. The second it breaks, you must assume we're going to start this. And go with that. Trust me. There'll be times you'll go, oh, it didn't work. Trust me. You'll see tonight why. And then the second it does this again, you must assume we're going this way. Okay? Now, also as we do it, okay, now as I go through it, I want you to see this. We're going to go with this. In the second we break, we're going to start trend the other way. Also, keep note of how many times it gets to these targets. Also, what I want you to see is this. Actually, I'm going to take this off. Well, I'll leave it on for you guys. Okay. Also, what I want you to see as I go through it is this. I want you, Gann talked about the behavior. It repeats certain behaviors. When we get into a hot zone, I want you to see how the move is usually hard and fast and comes out of there. Not always, but most of the time. There's a higher probability it's going to happen right here. Okay? Now, I also want you to see that when we get up in the extensions, I want you to see how sticky it gets. It will get choppy. Not always, but most of the time. And then I also want you to see how it gets stuck on the previous high or low, and you're going to see perfect touches on it. Okay? This is where the move comes. We're not even adding squaring price and time, cycles, anything, pressure points of squaring the range, anything. All those things add punch to the move. Okay? If you can get this, okay, pretty much this is just mechanical. This is emotional. Okay? But this is the thing you must train your eye. This is the art form, if you will. Doesn't take long. Some of you pick it up pretty quick. Okay? But I'm going to go through it. And again, I want you to see, I'm going to show you how this does nothing but come to retracements, go to extensions. Come to retracements, goes to extensions. Comes to retracements, goes to extensions. No end to it from 1929. Okay? Now, what I want you to get in the habit of doing also is this. Is the second that I get a swing break to the other side, my mind's eye does this. I don't see that anymore. And all I see is this. And the second I get a swing break to the other side, I don't see any of that. I only see that. But I want you to see how that's where it starts. And you must go with it. A lot of times you'll get confused and you'll see that and you'll go, oh, the trend's still down, because your mind's eye is so stuck in seeing this huge thing like this. It's got to be down. It'll trick you. Your mind, it's like being in a fun house. You don't know which way you're going. But it's down. You must think so. No, we're starting up because we're starting to break. Okay? And you've got to go with that. No matter what you feel like you should is real. I'm going to start right here. Okay? Now, the tricky part is, after we do this a couple times, we are going to eventually you guys do it. Okay? Now, the white line is going to be when we broke a swing. Okay? There's the first swing that's broken. Now, I'm going to go through this in 1929. Let me make this a little bigger so you guys can see it. Okay? Now watch. That swing is broken. Now, I'm going to put the FIB tool on it. Okay? We came into the hot zone. right here. I'm going to take this off, so it's going to make it easier for us if I just do this. Okay. We're not squaring yet. Okay. We made target 1. We made target 2. Okay. Now watch. We broke this swing. You're going to stay with that. And now we're going to get ready to fib it again. From here. A lot of you are fibbing from up here where the start is. No, you're going from the last swing. You're not going from up there. You're going from the last swing. Okay? So watch. We come in to the hot zone. We come to target 1, come to target 2. We broke that swing. So we get these targets. We're immediately waiting for another retracement. It's going to start to trend. Okay? So let's watch. We don't get another retracement from here. We're not getting any retracement in the hot zone. There's nothing. All the way down. There's nothing. Market just ran away. Okay? So we wait. So watch what happens. We get this swing here that broke right there. So we're going to get ready to fib it. Came into the hot zone. Now we're not even adding entry or squaring a price and time. Another thing as I go through this, I want you to keep in mind that when you're on a daily bar, the average is going to be about 8-to-1 winners over losers. Okay? So watch. That did not work. Okay? Now, watch what happens. Oops. We start to break upside. We must immediately shift gears and start to favor that side. This is 1929, okay? I'm going to fib from there. That did not work again, okay? We break down. That did not work again. Okay? We didn't even get the third target, or the first target, with 3 targets. Okay? Now watch. We start to break. You're still up money. Okay? We break that swing. Now we're going to start catching these trends. All right? So watch. We break. There's no hot zone here. Oh, yeah, there's. Right there. And here we go again. Now, a lot of these trades that were misses, that didn't work, did not square. Squaring will keep you out of it, too. Plus, even if it did square, a lot of times we won't get entry because it did not change swings on a smaller time frame. Okay? But we come to the hot zone, we go to target 1, we go to target 2. So watch. Again. We're going to do it again. Here it is. I'm just going to show you the rhythm that it's going to constantly run this. Everything is a fib or a Gann squaring. We come to the hot zone. Target 1, target 2. We break. Hot zone, target 1, target 2. 3 in a row. Again, average of 8-to-1 better. We broke that. Now that's a tough swing to see. These ranges, guys, this range, this is back in 29. Get this. The range was The high was 286 and the low was 279. That's a 1 minute bar now. Isn't that something? Okay, so now we're going to fib again. Hot zone, target 1, target 2. There's no end to this. Now, watch what happens. We start to break noticeable swings. Well, let's do this. Let's say there's another loser in here. We broke that. We went to fib that. To be honest with you, I probably wouldn't have traded this because it was just too tight. We came into the hot zone. We got the first target that I'm having you guys go, but we didn't get target 2 and target 3. So we break to the downside right here. So watch. Hot zone, target 1, target 2. We're going to stick with that. We broke that. Okay. We're going to fib that. It did not work. Okay. Came down here. It did not work. We've had like, I don't know, 7 winners, 6 winners or so from there and 1 or 2 losses. Again, now if you take that, what's 6 times 8? Okay. This trade did not work. But we break a swing this way. You must assume the second that it does that, that we're going to start trending, and you're going to go with that. Okay? The reason you're going to do this, it's like the turtles did. So their whole strategy was built around catching every major trend. And this is how you're going to do it intraday, or taking less risk and getting your winners bigger. So watch what happens here. I must assume we broke a swing. We came back into the hot zone. We got my target 1, no target 2. Now you must remember this. 8 times out of 10, my target 1 is still 5 to 1 better on just half of what you put on. Most people struggle to get their whole position or their whole strategy 2 to 1 better. And I'm showing you where half of it, assuming we were trading just a 2 lot, could have been a 10 lot, whatever the case may be, a 4 lot, 2 and 2, 10, 5 and 5, whatever, is 4.5, 5 to 1 better just on the first target, letting the other one run, or just really trying to get to this target. But let's say you're in a free trade. All the books talk about being a free trade, being a free trade. That's great, all well and good. You must stack the math. You must stack the math in your favor. So not only is the probability, Gann and Fibonacci are the only 2 things where you can be a high probability right and the winners are bigger. Usually strategies are one or the other. Either they're like 50, 60% right, usually around 50, but their winners are 7, 8 times bigger. But the other strategy is around a 1 to 1 ratio or 1.5 to 1 ratio, where they're a high percentage of being right. Well, everybody goes towards the 1.5 to 1 or 1 to 2 to 1 ratio being a high percentage right, because it's uncomfortable to be wrong. But the math is in your favor more if your winners are much bigger. Okay? So we get that target. Now, we didn't break a swing. We just went to the high. No trading until swing is broken. Here's the next swing broken. Okay, so we're going to get ready, our FIB tool, and we're going to get ready to come down here and fib. We get no fib in this whole move down. There's no other swing in here, nothing. Okay? But watch what happens. I know you're seeing this as this whole trend's down, but look what starts to happen. We broke a swing. And now I'm going to start to do it all over again. And I'm going to continue to fib this and catch hot zones. Hot zone, target 1, target 2 is not hit. It broke that little swing. Yes, that's a swing break. You can call it a double top, all your books. But I'm telling you, that's a swing break, and you should be buying that dip in there. You get your target 1. I don't get my target 1 or target 2, but you get your target 1 there. Okay? It's going to run that. It's going to run it over and over and over and over and over again. Okay? Anybody have any questions on that?
Our target 1, is that 38?
No, it's going to be, it's a 786 retracement of that move, but it's basically like if you added a ratio in there and gave it a 25% retracement or a 20% retracement. It's real close to the same thing. What doesn't show up well, Summer? You can't see those red lines? Are those hard for everybody else to see? Is that all right? Okay. All right. So, now, did anybody else have any? I'm getting a question. When you break a swing, you are setting the end of the fib after the next move. Hold on. Next move, another swing was broken. This is the piece that I'm not getting. Now we can talk. Okay. Okay. You have to be able to see and pick out the major swings. And this is how I started to do it. If I scrunch that chart like that, you can see all the swings. You've got to train yourself to see it. There's just no other way to do it. You can see these. I can see all these swings now. You see those? They stick out like a sore thumb. See that? See that? That, 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 this, there's one there, 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 there. You see that? Doesn't it look different when I scrunched it like that? You can, they stand out like a sore thumb. Okay. Gail's saying she sees all my breaks, but some don't look like major breaks. Okay. So what do you think you should do there? That a girl. If it doesn't stand out like a sore thumb, leave it alone. Leave it alone. Go practice more. Ask me. You'll be in the room for a year. Bob, you're just going to do it from the last swing, like right here. Here. If that was the swing break, I'm just going to do it. I'm not going to do it from up here. I'm going to do it from there. Came into the hot zone, comes down, does it again. So now I'm right there. We broke that swing, so I'm going to do it from there. You don't get the ending part of it? Are you serious? You just go until it stops. Go until the market stops. I don't understand your question, Bob. Unmute yourself.
Nick, I was just thinking,
so,
we didn't see the right of the swing. So if we don't see that.
okay, so it broke that swing, right?
Yep.
You would agree with me that that white line's a major swing.
Yep.
Okay, so what are you doing now? You're getting ready. You're getting your FIB tool. You're over here getting ready. You're hunting. You're getting ready. You got your, I mean, you don't have it out like this, but you're getting ready. Okay? Okay, so now, boom, boom. It's starting to turn around. Okay?
There you go.
So, I don't understand.
Gotcha. Okay.
You're just waiting for it to come. It might continue on down, but you got to be watching it and watching it and watching it. Look, you're in this day, you got to be like, hey, we're pretty close, so you're getting ready to do it. This is the problem that people don't do, is they're not prepared watching the chart. This is what you should be watching for. That's all I look for. That and spacing and symmetry. Remember when I went back to this right here, the Gann space and symmetry. So watch. What? Look how the swings are in proportion to each other. You see that? Look at these. See that? Look at this. That's symmetry. I know I got strength there. Look at this. It's almost like that. And then when it breaks that, look how the symmetry starts. The other way. Only it's a different measurements. It's a different sizes. You can't see this. When I get that and I get fibs and I see this like that right there, and I see that that's about the same, and it's coming into a fib. Whoops, sorry. We're coming into a fib there, and I see that those two right there are about the same. I'm going, oh, I'm chomping at the bit, going, oh man, here it is. That's all I got to do is square it and find out where it's going to stop, go, and I'm good. It's good to go. When you get symmetry, man, it is strength, 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 strength. Okay, so this is all the way back in 1931 when the ranges for the day were 6 points. Okay, now I'm getting a question about stops and rules. Yes, that's correct. Correct. That's correct, Paula. And I'll tell you what, the women in the Denver Trading Group are sharp. You guys are sharp. Sharp, sharp, sharp. All right. Somebody wants to know what the targets are for it. Let me find a really good, clean one in an uptrend so you can, it's easier to show you in an uptrend instead of a downtrend. Okay. We'll use this one right there. I'm going to assume it's a 2-lot. Again, we haven't squared price and time. We haven't added any squaring the range in there. Nothing. This is a 2-lot. Now, I'm getting in on much, 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 much smaller time frame. Okay? Much smaller time frame. Okay? This is pretty much the checklist that I run through and have memorized. This is daily. Swing break, check. I'm getting ready to fib and see if I get the market to come into a hot zone. it starts to come into a hot zone. Come over here. I'll move it over. Okay. You watching, Mo? Okay. I've got, we get a swing break. Check. I'm getting ready. This market's coming up, coming up, coming up. It breaks. I'm going, okay, I'm getting ready. I'm getting ready. I'm getting ready to use my hot zone. Okay? We get the hot zone. All right? Okay. We get the spring break. Cross it off. I'm getting ready for the hot zone. We get the hot zone. See, what's nice is after you do this a lot, you won't even need to draw the fib on there. I only draw the fib lines on there so everyone can see it in the room. I don't need it. I'll draw the fibs on there because if I've got it on a bigger time frame, I want to leave the lines on there so I can see it on a smaller time frame when we get there. That's about it. I really don't need it, which is kind of nice. I just see it and go, oh, we broke, get ready, boom. And then once I'm into this hot zone right in here, then I'm squaring. I'm taking the one swing tool, the two swing tool, so on and so forth. Let's say this squared. Now I'm going to do the exact same thing on a smaller time frame. What do you mean, Summer? You're always going to the highest high. That's the highest high. I don't need to use the first. You don't do that. You use the highest high. Okay, so now I'm going to go to a 30-minute chart. I got to change this because I don't use 45-minute. Summer. Okay, let's talk about what you just said. How do we know if we're going to go higher? Okay, so I fib here. You say the bar that broke it, right? Okay, that bar broke it, right? Yes? See? Okay. All right. Did it come into the hot zone first or did it go higher first? Okay, so should I leave it there or move my fib up? Should move my fib up, right? Did it go higher first or did it come into the hot zone first right now? See, this is the stuff that all you Denver people, you guys are way over informationalized. When someone starts asking me stuff like that, that tells me you guys were into reading bars that broke highs and lows and closes and all. Just okay. This is so much simpler, guys. This has been going on since the dawn of time. It's been right in front of you, and no one's ever shown it. Now let's get back to this, Mom. Got a few questions. I apologize. Okay. So I'm going to show you, now we're going to guess where the stop's at because I'm not going into smaller time frames. We're not into squaring an entry yet. All right, but I'm going to show you how to run the rules to this. We're going to assume we squared price into, well, I'll do it. Might as well do it. What the heck? Make sure it's set up right. Okay. We'll see if it squares. Might not square. If it doesn't square, we don't trade it. It's probably going to square from one of the sources, probably. Don't worry about knowing where to square from. We're not getting into that yet. That wants to. Oh, let's do it from here. Doesn't want to square. And you must assume that it's going to be lower prices. Let's check it from the low slow. Yep. Gann said every turning point there's a squaring. There. We squared. We're not going into where to square from tonight. All right. Okay, so we're here. We're here, Mo. Done, done, done. We're going to go do the exact same thing on a smaller time frame. I like 8-minute and 30-minute. Okay? Those are my favorite. Especially like 8 because I can get in there really, 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 really tight. So I'm going to do the exact same thing. But we're gonna just say, Mo, that we got in about because we're in there pretty tight on an 8-minute chart. That started a trend and break swings on a smaller time frame. That's what we're doing. We're waiting for swing breaks now and to run the exact same sequence. So in here on an 8-minute, this did this. The second I see that, I'm squaring everything and getting ready. Okay? That's got to happen in here. So the white lines are entry, and you put your stop down here. Now, depending on your account, you might not be able to put it way down underneath there. That's fine. You're going to have to find a tighter spot to do it, or you're going to have to cut the size down. That's why I love Forex so much. I can always put my stop in the right place, farther away. I can gear the. That's why I trade a lot of mini lots. I can put on 60, or I can, and if the risk is too much for my liking, my comfort zone, or my account, I can gear that down to 30, and I still have a lot on. So it would appear that when you have to go back further in time, yes, that's a whole nother part again. That's a whole nother part again, where you can measure time, the amount of time and the amount of move. No, you're just going from what's the main spots where I'll teach you. You'll get enough of that, Paula, where we'll be, learning all the spots to square from. Okay, so here's the rules to this. You've got these orange lines are two lot, okay? You're not allowed to take it off. You're going to leave these there, even if this gets all the way up here. You are going to, you're going to give that back. You're going to watch me do it tonight, probably. I've got a trade on the Dow. I'm into it late, but I'm going to give it back. The most I was up in it was 505. That's where it went to. Okay, and I'll give it back because I'm going to let that run to the targets. Okay, you're not allowed to move these stops until you hit. We're just going to go on my target 1. Okay, so this is my target 1. You're going to take it off, one of them off. Why do we take one off? Because of the buy low, sell high, double top double bottom mentality. Take it off. There was resistance here, even over here. You can see that became a pivot right through there. Okay. Now, once you get target 1, which is already 4.5, 5 to 1 better than the loser of all of it, only on half the position, you're allowed to do whatever you want with the last lot. Okay? You're allowed to do whatever you want. But you must move it to better than break even. There are some guys that like to move it up halfway. Some like to move it in here. What I do is I play around with it. I'm on the 8-minute or 30-minute chart, and I will come in here, and I'll find a pivot or a little what I think is support and resistance, and I'll park it in there and let it go. And then once it hits target 2, you take it off. And you're done, and you're reloading, and you're waiting. Now here's the thing. Yes, if this got all the way up there, the market got all the way up there, okay, you have your 2 lot on, and yes, the market got all the way up here. Let's say even there. And that turns around. Didn't go to the target and comes back and stops you out. Well, that sucks. Okay. Here's what's going to cost you the most money when you trade. One is not taking every trade. Number 2 is tightening up your stops because you feel pain in that big move, and you say to yourself, man, I want to capture some profits. The last one, you know, that one went against me and I turned that into loser. I'm not going to do that. I'm not going to do that anymore. That was stupid. All the books and everything say, take some profits. You can't, what's the saying? You can't go broke taking profits. Nope, you're right. You can't. But you can sure as hell screw up your mathematical edge in your system that you developed. I'm telling you, the mathematical edge right there in the risk reward is huge. It's huge. Why not put that in your favor and just do it? Okay. Now, this is going to be, this trade wasn't. This trade took off like a rocket. Right here, you're saying, Nick is great. I'm so glad I took his course. Not everyone's going to work. Not everyone's going to work like that. Okay. This is the problem 99% of all traders have right here when they start to learn this, is because I'm going off a daily bar. You guys are used to going off 10 and 15-minute charts. So to say that you're going to sit in this trade for 1, 2, 3, 4, 5, 6, 6.5 days, you've never done that before. If you have, you've done it by accident, and you woke up one day and all of a sudden you had a position on and got a call from your broker. Does anybody have any questions on that so far? None? Wow. You guys are all trained. See you in the room tomorrow. Okay, so you're seeing the rhythm that this is running. Okay, we're not even talking about squaring or adding cycles and adding any strength to it whatsoever. Okay? Now, did that help you, Mo? No, Mike, my target's not between there. That's the hot zone for retracements. That's the hot zone. That's when I'm getting ready to square. That's when I'm going to start looking to square it and see if we're going to, you know, if there's going to, you know, where that thing's more than likely going to stop at. All right. Bear with me because I'm reading all your stuff all the time. Okay, watch this. This trade's on right now. Okay. See the fib lines on there? That's done off a daily bar. Okay. This is the squaring down there. This is today. I got into it late. That's all right. It's a mistake. That's all right, Mike. Let's just make sure we use the same lingo all the time. Train that in your mind. So, you know, we're all talking the same thing. So I'm in this winter. I'm into it way late. Should have been down here, but was teaching, answering questions, so on and so forth. So that's where I'm in it. Yep, I'm going to turn this into a loser. My stop's down in here. So watch what happens. My target is all the way up there. There's the two targets right there. Yep, I'm going to sit there and I'm going to wait. And yep, if I was in down here, yep, I'm going to give that $700 back. Hartman, you're there, right? Can you hear me? Can you unmute yourself?
I hear you.
You've been with me probably the longest of anybody in the room. Matter of fact, you are. Have you seen me turn those into losers?
I seen you give some money back. Remember I told you were nuts that one time? And then you took it off and then it went.
Right. Yeah, Gail. Gail, I love you, Gail. Yes, you dead on, Gail. Dead on. Yes, I search the daily. That's the bigger setup. If I don't have anything on daily, I'll just go scan around and look for the 30-minute, and I'll just take swings and measurements off of that, you know, and bang around on that. So that's why I think you should be looking, once your eye's trained, you can scan all the markets for swing breaks. You don't have to get stuck on one market, because all you're doing is looking for one thing, and you're going in sequence with all of them, because that's where the mathematical edge is. Sometimes you might have to wait. You guys watch me not trade the equities for like 6-7 days because it wasn't pulling back. It wasn't pulling back, and I wasn't going to chase it. I was waiting for it. Okay. GP, I came up. I'm just showing you. I use the range charts for another form of entry. It's my boredom trade when there's nothing else going on. That's why I trade it for necklines and little things like that and bounce around on it. It's basically a FIB tool, GP. It's very simple to use. It automatically puts the targets on there. Targets the high and the 1.24 extension. That's what they are. Bob, you wanna do that? Go do it. You wanna change it and do it? That's just scared. I want to hurry up and take quick profits. Every time I hear that. No, get good at following the rules. You're getting a complete, quantified, tested over so many years of data, a legend in squaring price and time with Gann, mathematical edge. It's yours to screw up. It really is. It really is. It really is. Okay, so I mean, I can see these fibs the whole way up. Just the whole way up. There's one hot zone. I can move this up to that one. There's another one from right there. Goes to the targets. Got another one. It's not going to reach that one, I don't think. No, it's going to be like 30. Oh, it did. There's another one. Boom, it goes into the targets. Again, it's all mathematical rhythm, and it's going to run it. There, we come back in the hot zone, we go to the targets, we flush down. Now I got to be favoring the downside because we broke all the swings to the downside. Broke here. So now I'm getting ready to fib. We don't get one. We don't get any fib in here on anything, but we start to break to the upside. So now I'm here. I immediately shift gears and go there. Hot zone, targets. Move it up again. Hot zone, targets. Move it up again. Hot zone, targets. Move it up again. This is why you do this, guys. Because you're going to catch 6, 7, 8, 9 in a row. It has to touch the 5 as a minimum, and it just cannot break the previous lower high. It can come all the way down there and double bottom. As long as the swing break was in to the upside and it did not break a swing on the lower side, you are still long. You are still long. Yep, that's right, Jerry. Look, when you guys do this, you will make more money. You will make more money instead of getting in here and riding this whole thing. You will make more money riding that, getting back in there. See how much more of the trend I'm getting? Pull back, plus less risk. Pull back, plus less risk. You square it, 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 and no end to it. We haven't even had cycles or anything like that. Again, here I'm back in 1937. Here we go again. Here we go again. Hot zone, target. Didn't get target 2. Let's do it again. It's right here. Both targets are hit. Let's do it again. Let's slide it down. And we'll do it again. There's the hot zone. We get target 1. We don't get target 2. We move it down again. And we get target 1 and target 2. Here you go. No, they're not, Jerry. They're not at all. You catch them so quick. That's what being in the room is for. So you can do it live with me. No one's doing that. You're left up to your own devices. I could package all this and put it in the DVD course. It'd be easy. I can put it in the DVD course, shove it in the mail, call Trade Navigator, put your tools on there, and say, see you later. I want you to be a better trader. I want you to get it. And after a year, if you don't get it, quit trading. Because you ain't going to get it. I'm just being honest with you. You got to have some practice ethic. I have more practice ethic in my little finger than in any 30 people I know. Now, I can go to any market. I can do this in anything. I just wanted to show you on the cash Dow, so because I have data that can go all the way back there, so you can see that this is not a self-fulfilling prophecy. I'm trying to answer your questions. You guys can unmute. You guys can unmute yourself. It's easier if you just ask the question instead of me reading. Yeah, don't privately chat me. You only privately chat me if you've got something personal to ask me. Do it so everyone can see, but go ahead and talk. Go ahead, Ken. I'm going to keep you guys muted because sometimes you have noise in the background. But when you're ready to ask a question, just unmute yourself and ask it. Ken asked, Nick, when someone asked, okay. Yeah. So everyone else can hear it. Sure. Okay. Now, here's what I want to. Here's the next part I want to go over with you. Is structure. There's a difference between trend, space movements, and symmetry as there is structure, or let's call it Gann sections. Okay, I want you to see, okay, you must assume that when we break a swing, you're going that direction. Don't let it play tricks on you. Stick to the rules. I love what David Bowden said. He said, do not be anticipatory stupid. Don't anticipate. Follow the rules. I showed you the mathematical rhythm and the targets. Okay. What I'm going to do now is show you the structure of the market. Again, this is all it does. Who has seen me go over market structure before? Any of you? No? Paul says no. Ken says no. Okay. All right. This is crude oil. Okay. Does it in everything. Okay. I thought this was a great explanation. Everyone's heard of Elliott Wave. Okay. Elliott Wave has a basic concept of a 5-wave count of 1, 2, 3, 4, and 5. The problem with Elliott Wave, if you can get it to work, great. I never could get it to work. And the second I found out that there's 13 wave principles and each of those waves has like 7 or 8 rules to it, I said, no way. I've gotten their newsletter. I get it for free. My buddy sends it to me, and it's ridiculous to figure out. They're good. They're the masters at it, and it's wrong. Okay. And here's the problem with it: is they're adding. They believe, R.N. Elliott believed, you could account for every single swing, even in these areas, even in the sideways chop areas. This is where you'll hear them say, well, you're in an A, B, C, D leg, in a 1, 2, 3, and a minor 3 leg, ultimately in a grand supercycle, B wave, downward market structure, or whatever. I'm like, whatever. Okay. Here's the difference between Gann and Elliott Wave. Gann never talked about that. Well, first of all, wasn't even around then, but this is what he was doing. Again, I showed you the mathematical rhythm. Now I'm going to show you Gann sections and spacings, okay? Gann did this. He was counting these. Okay? It's actually a count of 4. Not always, though, but almost always 3. And 4 usually terminates just a little above the high. Gann talked about that. When you see one that doesn't go more than a certain percentage, basically, if it doesn't go into an extension, it comes off, and and you've counted 3, and that was 4, you're probably turning around. So watch. We're going to count these sections. And right here in front of you, this the whole time. Doesn't always work, but most of the time it does. It's going to amaze you when you see it. Let me get my little pen here, okay? Watch. 1, 2, 3. Notice the equal distance, how they are? See the symmetry in those? Not just the symmetry. Forget the symmetry here. Look at the length of those. See that? Watch. 1, 2, 3. See it? You get 1, 2, 3. This you only get 1 and 2, but then look what happens. 1, 2, 3. You only get 2 here, 1 and 2. Okay. Look what's happening. You're in a bigger structure. See, this is what Bowden and Gann are doing. They're doing this on a weekly chart, not even daily. Bowden said that. He says, get off the daily chart. It just buzzes around too quick. He's saying the daily chart buzzes around too quick. You've got to be kidding me. Okay? So if we told him we're trading on a 10-minute, he'd laugh at us. Right? Okay? So now watch. I'm just going to go through this. You can see it. You can count it. I'll go back to where I was. I was right in here. So this is structure. Okay? This is where we had 1 and 2. Okay? Now we'll see what you're doing here. Watch. See how this completed. When you start seeing this, I'm telling you, pay attention to this. See that? 2, 3. See that? 4th terminates right at that high. Wild, huh? Oh, watch. Look what you get here. 1, 2, 3, and 4. This just took off like a rocket. This, you didn't get anything. You got 1 and 2 there. Fine. Then you start to resume again. You can count them. You want to look for them to be about the same distance, the same length. 1, 2, 3. Here you only get 1 and 2. And you're going to start to resume again. 1, 2, 3. Everybody see that? It just does it over and over and over and over and over again. We haven't even added squaring to it whatsoever. Not a single squaring to strengthen it. Again, 1, 2, 3. 4th, here's the 4th, terminates just around the high, doesn't it? See that? No end to it. Here you go again. 1, 2, 3. 1, 2, 3. There might have been a 4th in there. Yeah, I miscounted that. I missed that one big swoop up. It's right there. 1, 2, and 3, and 4 terminates a little above it. See how accurate that is? This is structure. It's been doing it forever. Forever. Here you go again. 1, 2, 3. Look at the 4th. Terminates. You even get this. 1, 2, 3. Pretty wild, huh? So simple to see if you open your mind, if you open your eyes to it, and you train it to see it. 1, 2, and 3. 1, 2, 3. This was probably 1. This is 2. Here's another 3. Here, watch this. It's just happened. Works the same in Forex. Here's beans. Here you go, Mr. Hartman. One, 2, 3, 4, gone. So now look, here's what we're doing. Here's what do you want to do in beans? Look, it's happening right now. We got a swing break. We are going to wait for hot zone, and we're going to square, and we are going to try and ride it out. We are now assuming we are going to start 1, 2, and 3. Get it? When you get that, Ron, are you there? This is your options play that we were talking about. It's stuff like this. Squaring, cycles, end of market structure, you got it. This one was tough to see. There's one. This was kind of long. You would have liked to have seen this pull back. It would have been noticeable, but there's 1, 2, and 3, and you get 4. Square price and time. Look, double tops, boom, down. That's all it does. Do it on daily, weekly, the whole 9 yards. It's awesome how it works. It's awesome how it works. Yeah, it's fractal base. So that's happening there. Watch this. Let me change this chart. It's happening right now. Just happened, actually. Here's the equities. Here's YM. Let me make it the YM. Okay. Watch. Can you guys see this? Two, 3. The second you saw, think of it like this. The second that you saw that second leg out like that, okay, you can't ignore this because everyone's over here looking at the mortgage crisis still and all that BS. You can't see that, okay? That's over with. So we're going to go to there. The second that you see that leg looking the same like that, look, I can almost take and duplicate that line and put it there. Just about. Look how it runs even on the same angle. You see that? It's telling you a story. So the second you get that, you got to be saying, man, I got a shot at this. This is, look at the move that's here. This is what Bowden talked about. Bowden said his whole goal was to catch 50% of the major moves. And so he'd be in here counting the structure, and he'd be in here catching this and squaring price and time. And boom, he even said that in his work. He said, after you square price and time, you've got market structure, you square price and time. Now it's just sit back and hold on for the ride. So now you got to be expecting that. And there it happens again. Look what happens inside it. Look what happens inside it. Look at this. 1, 2, 3. You get right in here. It's noisy, but it's there. 1, 2, and 3. 1, 2, 3. There's your fourth. There's even a 1, 2, 3, 4 in there. This you only get 1 and 2. Look at it again. I'm showing you this because there's no end to it. I just showed you on 3 markets. This is what it does. It does the same thing in Forex. Does the same thing in Forex. Here you go again. 1, 2. That was weak. I would have liked to have seen that up above that high. There's 3. Here's 4. Terminates. Now this is a dilemma I have right now with this market. Okay. Is this. You must stick with swing theory. This is the Dow, and it's now. Okay. since we completed this structure, okay, 1 has started. Don't know if this is 1. I'm going to assume this is 1. So 2 and 3. But I must respect this first, is that. And I'll be squaring price and time if we get up here and looking for this and trying to catch that. And it should probably, if I catch it, if we catch it, because you guys are in there, should run about another 24 days, give or take. But you got to be thinking that. Anybody have any questions on that? Ken, you said fractal. That's correct. It's fractal. Thanks. Can I have this? Or are you going to hold on to it for a while? Thanks. Thanks. You got to go. I'll be done in a little bit. Shut the door. Parker, you got to go. All right, I will. Thanks. Shut the doors. Thank you. Nick, before the end of the lesson, while we are all here, okay, let me answer Gail's question. All right, what I'm going to do is we're going to do probably 4 of these, all right, where we're going to go through every little detail of it in each section of it. We'll go through all the squarings, so on and so forth. Every little thing, we'll go over entries and run those out and follow the rules. We'll go down to a smaller time frame. From there, Gail, about doing Sundays, what we're going to do is we're going to record this, okay? So I probably won't be doing the Saturday or Sunday thing because there's not that many people for it, okay? What I'd like to do after the 4 sessions is, how many of us are there here? Sue, how many are there? I know you already counted, Sue. 21. 26, okay. 26. So, okay, let's see. Okay, divide by... I'm doing something here. Bear with me. Is we'll do like another 6 sessions after that and really make it like a boot camp. And here's what I mean. We're going to pick people to start the first time to volunteer. You're working now, Gail. Okay. To volunteer each time. And everybody is going to be responsible for showing the group a setup all the way through. To find a setup, broke a daily, squared it, the whole 9 yards. I don't care if it's 5 years. I don't care if it's last week. You're going to find one, and you're going to show it, and you're going to go right through it. Everyone's going to get to see it. Everyone's going to get to critique it. You're going to do it live in front of somebody. The teacher always learns more mentality. And you'll be put under a little bit of pressure, and you'll have to be organized to speak in front of the group. It will strengthen you. And we'll do like 3, 4 people at once. You do one, do one, do one, do one. Everyone will get to see it and critique it. So over that period of time, everybody will get to do it, and we'll do it maybe once a week or every other week. What I want to do is the first 4 is just do them every week. So I don't want to take a break. I don't want to take a week's break and let too much time elapse. that's kind of my plan. As far as doing the Wednesday workshops, you know, Monday, Tuesday, Wednesday workshops, you guys are all up to speed and organized. I'm going to go back to doing them at 1, and they're primarily going to be to answer everyone's questions and to review at that day, because you guys will be able to see this more setups and so on and so forth and answer any questions. They're still going to be the same. It's just I'm not going to do 2 of them. You know, I usually do I was doing 1 for you guys, and then I was doing another one for the group, but we're just going to make it 1. So, but we're still going to do them Monday, Tuesday, Wednesday.
Okay, on this YM, Are you hearing me now?
Yep.
Okay, good. Where the market comes up and makes the most recent high today.
This?
Isn't that where you consider a swing break? So now you're going to be ignoring everything, that down move, and be looking for continuation up?
Correct. And this is why I got long, and I'm long now. Where is it? Right there. And then there was that. I know that bar square too. Where is it at?
Did you come all the way back down into the hot zone from that high?
Yep. Just into it. I know it doesn't look like it because it's a mess, but yep. No, I know where it's at. I'm doing so many. I'm amazed that I can remember them. It was from here. I got 2 or 3 there. I know we did it because we did it together in the room in the morning. Howard even had it. Where did I do it from? Yeah, okay. It's right there.
Well, I think I'm seeing exactly what you're telling us we should be seeing, but where I get confused is the way you describe it with your words, because sometimes when you say swing break, you mean a swing break because now we're changing directions, and sometimes when you say swing break, you mean a swing break we're continuing on the same direction. So that's where I get verbally confused.
Okay, well, it's not a trend. I didn't say trend change. I'm just talking, these are swings.
Okay.
These are all swings. Doesn't matter if it's long. It doesn't matter. That wasn't broken. That was broken. See, here we go again. Boom, break that. Now you're looking. See, we didn't get, this is why I wasn't trading much Dows, because we didn't get any single pullback. We broke all that, but we didn't get any single pullback.
Mm-hmm.
Not even, and then it broke this swing. And then I was looking to get short to come down here. Then we popped and broke that. And so now I'm going that way. But you know, the thing I don't like about it is, you see this? Even though I'm going swing break, you see that symmetry like that? That's kind of, that's just that trader. My spidey senses are going off. So
you've got all the
that's
indicators
right.
for your system that still fit. So.
Mm-hmm. It's kind of like 2 things happening, but I'm going to stick with the swing break, and I'd like to see this come up in here, and then it'll be a little more symmetrical, and then bang, I'd like to see it start down. But that's all right. I mean, I'm long. If I catch it, I catch it. If not, I don't care. The winners are bigger than losers, because I know what's going to happen. See, that came right in there, Gail. See it?
Yep. Okay.
I know it doesn't look like it, but this is why you do it, and you take every trade, is because you're going to end up doing this. Break, fib it, targets. It broke, fib it, targets. It broke that, fib it, targets. Fib it, targets. Fib it, targets. Fib it, first target, broke. You fib this. No target, but we broke there. Broke that, fib it, target. So it was like 1, 2, 3, 4, 5, 6, 7, 8. 1 loser, boom. 2 losers, boom. 9. So 9 versus 2, the winners are 8. You know, you're up 72 trades now. The winners are bigger than losers. 8, if you're on a daily, say 8 to 1, even if that's 5 to 1. You see what I'm getting at?
Yep.
So, I mean, okay, so you're up 40 and you're down 2. This is how you'll trade less emotionally, and you'll be more likely to take the next trade because you simply won't give a crap. Because you'll be like, winners are so much bigger, man, who cares? You just keep going and keep going and keep going and keep going. And this is without running any other squarings or anything else that has to do with squaring price and time. Any cycles, anything like that. We haven't added any strength to anything yet. Anything. Catching cycles. Do it from here
There's
too.
still some chat about confusion about the weekday, midday times for your lessons. I think when you said you're only going to do one, people thought you meant 1 p.m.
Well, I'm only going to do 1 a day instead of 2 now. And
So
usually what I do is I do them at 1. I was doing them at 1 Central Time before you guys started coming. If you guys want to do them a little earlier, that's fine. I can do them at 12:30. But usually I like to take a break then. Markets are dead. I come back, we review. Maybe there's some trading, whatnot. Next Tuesday, we're going to, from these sessions are going to be every Tuesday until we're done, same time. That's what Sue told me that most people wanted to pick and liked, and that it fit for everybody. You're welcome, Joe. But this is simple. There's no indicators. There's no nothing. You know, I believe Mr. Zimberg said to me, because, you know, you're the only one who looks at the markets like this. The only other person I've known that I've seen do this is Carolyn Borden, who's the Fibonacci queen. She does this. I just think she fibs too much stuff. She's fibbing everything. Getting extensions, getting retracements. You know, she's doing stuff like this, where she's coming up here and she's getting these retracements, and then what she's doing is she's fibbing this right there to get extensions. You know, she's looking for strength in this tight pack of retracements and extensions. Well, I don't need to know that. I don't need extra lines on there. That's what she likes. For whatever reason, she does it in her mind. That's what she likes. That's the only person I've seen do it. Yeah, she does. She's good. She knows her stuff. She knows her stuff. And I'm not knocking her off. I've listened to her. I didn't learn anything really new, but because I was already fibbing all over the place. But she's the other person that I will look per swing and get that. Yeah, she likes clusters of stuff. Let's show you guys something a little interesting. Mr. Hearn, you got the video on. I'll just show you something. We'll end the night with this. I'm going to show you what you... Okay. Ron, you're going to find this kind of interesting. We kind of talked about this on the phone. All right, I got 17 trading days, right, in that move. Okay. 17 trading days. Okay. Multiply the swing in the amount of days times, multiply it times 0.618. Okay. Do 23 too. So multiply 17, which is trading days, times 618, which is 10 and a half, 11 days. On the 10th day, that's FIB time, it'll turn, and you get a hard move. Now, if I take 23 days, which is calendar days from that swing, we haven't broken the high, I slide that down, okay, and I'm looking for around 14 days, which is in here. See, Ron, this is why I love trading days, and you can constantly do this, and you're gonna see a big correlation with it. You can do it daily, weekly, doesn't matter. 13. You're gonna see so many turn on the exact day. So, and you guys want to go to bed. I went over swings. I want you to see it. We're going to practice it and practice it. We're going to go over setup after setup. And that's the real catch that you have to do. Okay, I'll do that. Okay, and I'm going to put this on a video on the website, but no one's allowed to ever ask me this again. And for those of you that don't have the tools on your computer, whatnot, you're going to have to talk. You guys are coyotes. You guys live together in the same den. Ask one of your other fellow coyotes. All right, this is how you set these up. This is the one swing tool, okay? All right, for all futures contracts, except for like the euro and the pound and all that sort of thing. But for S&P, crude, gold, all that, your multiplier is going to be 1 right here. It's going to be 1. And your rounding is going to be 0 and unchecked. Okay? Your ratings as far as hits go. It's a high probability in green. That's how I have it labeled. A medium hit in blue. And I have the low hit. I have it in black. I have it the color of the background of my chart. I have it basically turned off. I only go by those 2 hits. Okay? You getting this, Paul? In the spreadsheet, I have the range, the first one unchecked right there. I have it unchecked. And down here, I have the 2 things that equal P1 unchecked. And save it as default. If I use Forex, this is a multiplier of 10,000. And a rounding of 0 checked. For futures, it's unchecked. What I'm basically doing is I'm moving the decimal in futures, or I'm sorry, in Forex, because there's fractional pips that I want to get rid of. Okay? Got that, Paul? That's the one swing tool. Okay. I'm going to get rid of it. 2 swing tool. It's the same multiplier for futures and Forex. Okay. All 3 hits are good. I have them green, actually. That should be blue. All 3 hits count. Okay. In the spreadsheet, uncheck the first 6. It was for the programmer, and she left them in there, which is fine. And just know to uncheck them. They have nothing to do with time. They are just price or time by themselves. Uncheck the first 6. Save it as default, and you're good to go. And that's it. I'm going to do an hour-long video for you guys and put it on the website. You're welcome. Ron, are you there? You want to see the Forex thing I was telling you about real quick? And then I'm going to send out the syllabuses to everybody who still needs them. All right. I'm going to square the range here. Watch. I can even use pound dollar. It's one of my favorites. Where did I put it? All right. I'm going to take the SR tool, and it took me a while to figure this out. Okay. What I'm going to do is I'm going to come into here, and I'm going to make this 618 as my multiplier for this tool. You're going to think this is pretty cool, Ron. Watch this. Calendar days work too in this, but let's just take them off. All right, I'm gonna square the range. Okay. Okay. Now I'm gonna put these lines on there. See the market turn there, Ron? Is that slick or what? Watch. And usually they're going to be on a fib. It's going to be right there on that fib, right in there. It's going to be right on a symmetrical pullback. See that? Right in the hot zone. I'll keep going. Keep going. See that? It's calling out this bottom. Now I could do this, because this could be double, triple bottom over here. So take that. You just have to know that as you're doing your analysis. I just use 618. You can just go right. You can go right through it. See that, Ron? Is that slick or what? Spiral calendar. So what do you do? That's the spot, right? All right, now let me change it to Forex. So when you come into these dates, watch. This is so powerful. I'm going to change my multiplier for Forex. Now I'm going to come in here and try and square that, because that's where it turned. So I'm going to go from all the spots to try and square that. That's a triple bottom kind of thing going on down here. Yeah, I gotta redo it. Do it from the last bar there. I'm going to check all the areas. Nope, not yet. Get this off so I can get it on there properly. You're just going to hunt for it using this. You're going to get a lot of confluence with it. Let me use this. Make sure I save that. Something tells me I didn't save that right. Nope, I got it right. Okay. See that? See that? Watch. You can get in there on a small time frame and take that, but look at this. 1, 2, and 3. Look, you break that swing, boom. Now you get 1, 2, 3. That's how you catch it. Beat that up. Jump all over that. Pretty slick, huh, Ron? I thought you'd like that. Now I'll do a couple for you from the source using the one swing. So this would be the source down, one of the sources down here. Follow? This would be a source up here. Okay. Now I'm going to stick with swing theory and go, doesn't matter what side of the market I'm on, but I'm going to stick with trend. Okay. Now I'm going to come in here and I'm going to look for these squarings. This is tough because I got the bars so small. Okay. There it is. Can't get it on the damn bar. See that? Stick with the trend. See that? See that? You keep, see that? With market structure. Here, I'll go over here. We'll stick with trend. We'll just search for it. See that? Check this low. There's triple bottom in there. Nope. Okay, check, stick with trend. Probably calls out this top. Yep, see that? Get it on there a little better. Yep. It's on that bar in the middle. Stick with trend. We're broke swings. We're trending up. I did this back over the Aussie CAD guys, me and Sue. See that? And it was 87% correct when you go from the source. Watch this. Watch, Ron. Check this out. If you go from here, I can take the two swing tool and use both sources. Okay, so watch. I can go from the source, anchor that, and I can do the exact same thing. And I can search all the fibs for it. We're in a downtrend here. Little downtrend. See if I can catch some of these fibs. No. See if it calls out that low. Calls this fib. No. You get less of them, but you gotta be on top of your game and be organized. Now the bars are too damn small. There it is there. Bang. Call that out. You're just using both tools. There it is. And you just keep doing it, and you'll find them. Look at the moves on these things. You still need the entry, and when you get this, man, look at this. Boom. See how I used the one swing to that spot and couldn't get it, but I used the two swing and it squared there? That didn't square on the one swing, but it squared on the two swing. It's going to square from some. It's every turn. See that? Square. SR date. You can just take a range. Any range. Use that range. Use that range there. It's not hard to do. Just when you start coming into those dates, you're looking for squaring, and notice that that's going to be, when I use this, it's a pressure point. It's a nitric oxide, you just threw a twin turbo in your car, just pumped it full of NOS, so on and so forth. And that's what you do. You can use this range. I went a little too fast. I'm going to do a couple more, and then I'm going to send out, Paul, I'm going to send you out your syllabus here in a minute, or your course. Let's check this. You can do it in calendar days too. I don't really care for it much in calendar days. That's close. You'd like it a little more accurate than that. But you're coming into a good, remember that squared right there? That's within 2 days. We broke that swing, that squared. It's a good pressure point, calling out the low. You're going to add the cycle tool to it. Even just 1 year cycle is good. See that 1 year, you can do 1 year cycle, it's calling out that. Just 1 year cycle, almost all the swings. It's calling out that high, which squared before, we did that. Go from this major swing there, it's calling out that high there. Nice. You can just keep going and you keep going. I mean, you just would have all these on your chart down at the bottom. When you got close to coming into them, that was double confluence. Remember, that was it right there from another one. Sweet how it works. That's power to it. Yep, we'll call it out. It's uncanny. It's really cool. So, but anyway, what time is it? You guys got to go to bed. It's 10:15 my time. Whoever doesn't have the syllabus, I'll check. You're welcome, Ron. I'll check the my email, and I'll send them out to you, whoever emailed me tonight. And I'll stick around for like 2 minutes and answer any of your questions. You guys should all know what the settings are now for the tools. You're welcome, Lon. Just be patient, learn it, go through the setups. We'll get down to entry, and you guys will all be fine. You do, Ken? Man, You're welcome, Janet. Good night, Paul. I'm going to send that out to you. Good night. Kent, are you in front of your computer? Throw me just throw me another email so it's in the front of my list, so I can just send it out. You're more than welcome, David. All right, I'll look for your emails. I'll send it out. I'll send them out, but I'm going to go to bed. Actually, I'm going to probably go eat and come back and mess with my charts. It's hard for me to get away from them. So I will see you guys all tomorrow. If you need me, you know how to get a hold of me. And you guys have a good night. Goodbye.